This is for every trader. If you're aspiring, if you're serious about doing this, if you're about this life, let me ask you a question. What is your trading process? Do you know? Have you thought about this before? When you sit down to the screens to trade, what are you doing? And specifically, in what order are you doing these things? And if we were to sit down and just look at traders that have goals for what they want to do, and there's a group of traders that are going to be reaching those goals and making things happen in their trading. And then there's a large group of traders that just never seem to get there. They never seem to make that progress. They never seem to get what they want out of their trading. And what's separating these groups of people, people over here, they're not just lucky. They don't just have good karma. They are doing things that people over here are not doing. And we don't ever want to forget that in our trading, so much of this just comes down to cause and effect. And if you're dealing with an effect or results that you don't want out of your trading, you got to go back and start fixing some of the causes. And one of the causes that is going to help you reach your goals and get everything you want out of trading is having a good process in place. And there's a lot of reasons for this, but one of the primary reasons we got to have a good process in place is that while we're trading, we are operating in an environment that is incredibly chaotic. And it's random. There's a lot of randomness that happens in the market. And maybe on a different scope or for different participants, it's part of a plan. But for as much as you and I are ever going to know, there's an element of just randomness. And if you step into the market and you are doing chaotic things or random things, then you're always going to be getting mixed results because you can't improve upon anything. When you have a process that you're following, when things are going bad in your trading, there's something you can do about it. You can look at that process and see what part of this is not working or what part of it needs to be improved upon. But if you're just doing things randomly, then when you're not getting good results in your trading, what do you fix? There's nothing to fix. We don't know what to fix because we're just doing crazy things. And another big reason we have to have a process in place is that we are going to feel crazy things while we're trading. And instead of being able to act on those things, when we have some clear processes in place, we can focus on those things, make sure that we're going through those in order. And I can't tell you how many times I'm sitting on the screens feeling the impulse to do something crazy. And I just stop myself and think about, where am I at in this process? And then I take my finger off the trigger and don't go through and don't do anything crazy. This is a topic that has taken me an incredibly long time to figure out and to realize it's important and to understand what this looks like, what parts make it up, and to be able to flesh this out. And I really wish that when I first started and years ago, that this was explained to me better and clearly the way that I'm hoping I can get through and put it through in this video. Let's jump into it and talk about the trading process. As I see it, the process for your trading can really be focused on four main points. We need a process for how we're coming up with our trade ideas. We need a process for how we're entering the market, a process for how we're managing live positions, and then a process for how we're keeping our risk in check. We could throw in other processes. There'd be a great process to have for a way that you reflect on your trades and review your trades. But mainly I want to focus on these four, because if you can nail these down, if you have a clear process in place for how you're getting these trade ideas, how you're entering the market, how you're managing these positions, and how you're keeping everything in check with your risks, these are the type of causes that are going to start seeing very good effects if you can commit to this and stick to this and have this in place. And also, when you don't have this in place and you don't know what to focus on in your trading, we're opening ourselves up to just do a bunch of random actions, which are always going to be giving us very mixed and very weird results. So breaking these down just quickly, and then we'll dive in deeper. But we're talking about high level or high quality trade ideas as an initial step. This is your method. This is your form of analysis. And a high quality trade idea, this has to be something that you have seen before and something that you know what is most likely to happen next. This is a good trade idea. This can lead to a good trade idea if you're looking at the market and this is action that you have seen before and you know what's most likely to happen next. Through the chaos of the market, there is repeatable type action that you and I can observe and that you and I can take advantage of. And if you're sitting down at the market and it's something like FOMC day, an event that maybe you've never seen before, you've never traded before, and the market's going crazy because it's some kind of a catalyst, you can't be taking high quality trade ideas if you're in a market and the prices are doing things that you've never seen before. And to understand what is most likely to happen next, this is our edge. And this is the best that we can hope for as traders. We'll never know what is going to happen next, but we can know what is most likely based on trade ideas and based on things that we've seen before. And then once we have these trade ideas, the process of entering the market, this is where we move away from analysis and we start getting into the actual skills of trading. And a lot of times it's easy to learn analysis, or at least it's more easy to learn analysis. But one of the most difficult things that we have to do as traders is be able to time the market and to be able to get accurate entries. And the curse of being a retail trader is having a good idea, having all the analysis in place, but then getting the timing wrong and not being able to make any money on the idea. But we need a process in place for once we have these ideas, how the price action sets up and what we need to see in order to enter on that. And then, of course, once we're in a live position, we need to be able to manage it. And this has to be a process because we cannot be in a live position and then just start shooting from the hip and doing whatever we feel like doing. And the reason that we can't do this is because we all have different versions of ourselves. We all have the highest version of ourselves that's just a great person, pleasure to be around, cool-headed, a real champ. And then we all have this version of ourselves that's like a freaking little goblin that just wants to do the worst things, wants to eat the dumbest things, wants to doom scroll all day, wants just the worst version of ourselves. And the version of you, when you're sitting down, the market's not open, you're preparing for the day, the birds are chirping, the sun is shining, that version of you is not the version of you that's in a live position. When you're up against the hard right edge of the screen and you have risk in place, you're feeling all sorts of things. The little goblin in you is the one that's trying to take over. And whatever he feels like doing is usually the wrong thing. And so we need to make sure that we're not just running from our gut, but making sure that we're following some type of a process for this. And then, of course, our risk has to just be in check, and we have to make sure that there's a plan. And for this, the risk aspect of what we do here is something that we need to make sure we embrace. It's not something that we need to avoid. This is directly tied to our earning potential. It's the only way we can make money as traders is by taking risk. And it's something that needs to be throttled. It's something that needs to be pushed to the max without being reckless. And it is something that needs to be embraced. But there also has to be some kind of a process for how we're doing this. These things have to be in place. And if we have these things in place, the game can really change. Again, because we're going to feel crazy things all day, every day. And if we don't have that process to lean on, we're just going to do crazy things and we're going to get mixed results in our trading and we're never going to know what to fix. But we get this thing in place, the game can really change here. So let's drill into this and kind of unpack these things a little bit here. The first one being these high quality trade ideas or coming up with a trade idea. This really has to be the first step in the entire process. And once this is in place, I said it earlier and I mean it. There are so many times where I'm sitting here, you've experienced this as well, leaned forward on the charts, finger on the trigger, ready to enter the market. And there's no trade idea. There's no edge. There's nothing. You're just getting sucked into trading the action. And having that process in place, I stop myself all the time of feeling like I'm ready to enter the market. And I have to just stop. Where am I at in this process? First thing, trade idea. I don't have a trade idea here. What am I doing? Sit back. Take your finger off the trigger. Like, what's going on here? But thinking about this as a trade idea, this is your method, your process for how you're analyzing the market and coming up with ideas. What is your method? Is this something that you clearly understand and that you could articulate, that you can make sense of, that you are very clear about what exactly your method is? How are you coming up with trade ideas, and what does a good trade idea look like for you? Let's jump into my charts and I'll walk through. I think the best way I can explain this on my side is just by showing you. Okay, you should be able to see my chart right now, my trigger chart. This was Monday's action that we're looking at right now. And looking at Monday's action, coming into this day, preparing for it, one of the trade ideas that I had was for the price to return to the previous point of control. Okay, this is a pretty noisy chart because this is the chart I look for to push the entry on this. But this is something that I've seen before and that I know what's most likely to happen next. When we open up under these conditions, I know that revisiting the previous point of control is a likely thing to happen. And I know what I need to do in this situation. If we open up and we just push straight down to that point of control from the previous day, there was nothing for me to do. It didn't set up. It was something that I knew was likely, but it just happened. But if we open up and we start pushing away from that point of control, I'm looking for entry. Best case scenario is usually the opposite side of value from the previous day. That's where I look to enter and to look to lean against. And so turning on the trades that I took for this day, once we opened, we initially pushed down, looked like I might not take this trade. We then pushed back through the open to the other side of that value. I started the trade. We chopped around a bit. I increased the size. Then we dropped down hard. I scaled out as we were getting close to the target here. We never actually touched this. And I know that it's likely we're going to touch this. So as we pulled back to the open, I increased the size again. And then we started to push through the open with incredible strength here. The volume that came in was insane. So I hit the exit. Then we pushed a little bit further just to kind of extend that last rotation. I started the trade again. As we dropped down, I took it off at the open, expecting that we were going to be heading down and reaching this point of control. If we were getting through that point of control, potentially the other side of value. But then we bounced off the open very hard. And I ended up taking off the rest of this position. Now, all of this action in here, this was things that I had seen before, and I knew what was likely to happen. And because of that, it set up, I took the trade, and I even took the trade, got kicked out of the trade, increased the size on the trade and got kicked out. The last one of it didn't play out. Going back to the point of we never actually know what's going to happen next, but the only thing we know, or the only thing that we can do, is get on board with what's most likely. Now, I ended up flipping the script on this trade because once we pushed away the way that we did, and once we couldn't get through the open, it was clear to me that even though I knew the most likely thing was to reach that point of control, that's not what the market was going to be setting up. And at the time, we were past 1030, which also meant that the initial balance wasn't in play. The initial balance is the first hour of the day, the way that I'm looking at it. And I also know that that initial balance is extremely likely to get broken, one way or the other, if not both, but at least one of them. And so we're in a position where now the initial balance is set. The market has showed me that it's not breaking down. And so I flipped the script looking for that initial balance high to get taken out. So I entered, scaled out, took profits as we were breaking through that initial balance, took off at the other side. This was actually a micro composite value area. And the market ended up just shooting up crazy high. And I didn't stay in this trade, and I didn't take this up, and I didn't even re-enter anymore trying to capture more of this because I didn't know that this was likely to happen. I didn't know that on Monday the market was just going to go straight up 70 points the way that it did. When this was shaping up, there was a situation in here that I knew what was likely, that I've seen this before, that I knew where this was likely to go. And then through this, let's say, kind of pocket of space here where I could see something clearly, the whole rest of the day, I wasn't clear. I didn't know what was going to happen. In my opinion, the market was doing something that I didn't even think was likely. And it just wouldn't stop doing it. It just went and went and went and went and went. And there was no other trades there. But the idea being here, and the important thing, is that we just need this way of, through all the chaos in the market, not just jumping around and chasing it, but making sure that we understand. We've seen this before. I know what this looks like. I know that this is not working. And it also, because it didn't work, set up something else in the opposite direction. But this all just comes down to to the method that we're using. And the method that we're using, we have to have tools in place. These tools we have to have mastered, and we have to just be clear in ourselves of what exactly a good trade idea looks like, so that we can go out there and that we can execute on these things. Having a trade idea in place, the next thing that we have to be able to do is enter on it. And this is very hard. And this is the most frustrating things for traders. This is what causes a lot of traders to keep jumping around different methods because they just can't ever seem to get something working. And a lot of times they might have some type of an edge, but they just can't get it because they can't get the timing right. And they're needlessly just getting very chopped out. This is a skill that should be worked at. And if you're frustrated with feeling like you're getting chopped out of the market a lot, or feeling and maybe knowing that you're getting some bad entries or sloppy entries, just understand and appreciate the fact that it's difficult. And it's okay if this is causing you a lot of frustrations, but this is a skill to work at. This is something to build upon. And I would suggest, as a process to have in place for this, just a clear understanding that you can only do two things really when you're entering the market. You're either going to be entering on momentum, or you're going to be entering on some type of a pullback. And what I think is incredibly more beneficial to do is to enter on pullbacks on lower volume. And I should actually let me go back to the screens here if I still have these pulled up. Looking at something like this, just clean this up for a second. Let's say you're trying to get long at the open here. When we push through that level, okay, entering in on that momentum, or in a case like this where we pull back and the volume starts dropping off, right? These are, broadly, let's say the two ways that you can enter the market. And it would be important to know what you need to see happen when the market gives you an entry, because this is the process that's going to go through. You're going to have a trade idea, but just because you see the trade idea doesn't mean you have the entry yet. The price action has to set up your idea. It has to give you the entry. And if you don't have anything in place for this, okay, it's going to be impossible to make sure you're getting accurate entries. It's my opinion that entering on momentum is extremely difficult. And the reason that it's difficult, it might be actually a little easier on a product like the NQ or crude oil, products that are a bit thinner and move faster. But a product like the S&P is extremely rotational. And if you're trading a product that rotates a lot, the markets just move. They have ebbs, they have flows. And if you are entering on pullbacks, the likelihood that you're at least getting a good spot in the rotation is way high. If you're entering on momentum, there's very little that separates a good momentum entry from just getting in at a horrible spot in the action and on the rotation. And so something to consider if you feel like you're struggling with your entries is, instead of just entering it on the market, or instead of waiting and hesitating and maybe under the guise that you're getting in on momentum, and maybe you're just hesitating and getting a bad spot on the trade, but letting the level that you want to get in and what you're seeing happen, let the action pull back, and let that pullback happen on lower volume. When you can see the action pull back to a level you want to enter on and the volume starts dropping off, this is beautiful. And this can lend itself to being some of the highest quality entries that you could take, in my opinion, or at least getting the most accurate entries. So there's many ways that we can enter the market. The point being here that you have to have, or you should have, some type of a process in place for this. And as a starting place, at least something to focus on, getting good at entering on pullbacks for your trade ideas can be a real game changer. It is for me, and this is primarily what I look to do, even through to this day. Okay. Following this process of having good ideas, letting the price action set these things up, and then what are we doing for our management? What do you do once you're in a live position? Very similarly, there's only a few things we can really do. When you're looking to manage a position, you're either going to be going all out, so you're in a trade and then you're just going to let it either go to your stop or let it go to your target. You're going to do some kind of maybe scaling in, so you're in a trade, and then as the trade works against you, you add to that position, expecting that it's going to be coming back at some point. Or you scale out as the trade is working. So you're in the trade, and then as the trade is moving, you're taking profits along the way. And other things that you can do, those three, broad management techniques, I would strongly, what has been very impactful to me is scaling out of a position as it's going into my favor. So getting into the position and then scaling out as the market provides, and as the market gives places where we can do this. And one of the reasons why this has been very important to me is because I think if we're looking at trading in a vacuum and we're not really looking at the real action, but we're just thinking about it hypothetically or what makes sense on paper, it probably makes a lot more sense to just go all in and all out on your trades. Get into trade, take it to your target or take it to your stop. And in the real world of trading, this would be a good example if we turn these trades back on, where my target here was this point of control. And there was a process in place for taking profits as the market gave it, or scaling out for profits as the market provided this, and ended up taking this essentially 3 different times trying to get this target. And not one of those times did we actually go to the target. The first time we got extremely close and then reversed around. This place where I increased the size just went straight against me. And then this last time, this was a great profit on the table, but it really didn't even get close to my target. And this is a lot of what we're dealing with, where maybe on this long, where it did go straight to target, for every one time that it might go straight to the target, there's a lot of situations like this where it gets extremely close or it gets kind of halfway there. And if you have no process in place for how you're managing that live position, if you're just relying on the extremely binary stance of taking it here, exiting here, that forces you to be incredibly accurate. You have to be incredibly accurate with your entries. You have to be incredibly accurate with your targets and your stops. And I find this to be extremely difficult, to where we have the ability to not be perfect with our trades. And even a lot of trades that would ultimately fail, they don't have to be losses. This third short that I took here, being a perfect example, this trade failed, but it wasn't a loss because I was scaling out along the way. This is something you got to sort for yourself and figure out, what exactly is the best thing for you to do. But this has been very impactful for me, and all of my management has some version of scaling out as the trade is working. The only exceptions would be on very short-lived trades that have very tight targets that I'm meant to just get in and out of. But the majority of all trades have some kind of a scale out aspect. And if you're in a process of maybe scaling into your trade, so you enter and then you look to add as it's going against you, this is typically a very bad idea if you're new to trading, because there's very little that's going to separate adding to a trade, scaling in, and adding to a loser. And adding to a loser is the craziest thing that you can do as a trader. We don't ever want to do that. So these are some thoughts for your thoughts and some things that have been very impactful for me on the management side of things. And then, of course, the last thing that we should have in place, or at least the last process that I'll talk about here, is a process for your risk. And the risk plan that we have in place, if I'm giving you some thoughts for your thoughts here, what I would say is it's very nice to have a low risk profile as you're learning how to trade. The idea of maybe risking 1% to 2% of your account per trade, some of these things make a lot of sense in the beginning, so you can make a lot of mistakes, the market can punish you, and you don't have to take big hits. But something to keep in mind, that as you move forward in your trading, if you're like me, if you're here on this channel, I'm assuming you are, but if you're an active intraday trader, for what we're doing here, it's not a very sustainable thing, in my opinion, to just risk the same amount per trade every time, all the time. Most of us, especially when you're starting off, you don't have a ton of capital. These are things that we have to work into. And to be in a position where every trade you're treating exactly the same way, this is a big error. And the reason it's an error is because the market provides us wild amounts of opportunity. And there are times where you have valid setups, but you need to scale back and don't be as aggressive with it. And there are times where you have some very high quality trades that are great risk parameters, and you want to be able to hit the throttle on those and go heavy. And we need to be able to make those decisions. And so we don't want to just make those decisions randomly, but some kind of a process for how you're, ramping things up or throttling. And this would be something maybe you don't have to focus on right now. It might be good to start with some kind of a less aggressive risk plan and then, scale into that. But the idea being, at least have this in the back of your mind, that you eventually want to have some kind of a dynamic risk plan. For active traders, I think that this is, a very important thing to do. Okay, this is a high level view of some processes to have in place. And maybe outside the scope of this video, to do each one of those processes justice in really fleshing those out. But the purpose of this is not necessarily to do exactly what I do, or even maybe exactly what I suggest. But in general, understanding that, yeah, I got to have a process for how I'm coming up with trade ideas, so that I know when to not be involved in the market because I don't have an idea. I don't have something that I've seen before that I know what's likely to happen next. And then when I have those ideas, there's a process I have in place for when I'm pulling the trigger and when I'm going to enter, to make sure that I'm getting a good spot in the rotation, to make sure I'm getting something accurate as an entry, and I'm not just entering in no man's land at a FOMO or at a hesitation. And then when we're in those live trades, how are we managing that position? And how are we making sure that we can secure profits when they're there? We cover ourselves minimally when the trades aren't working. Having these things set up, and then just some kind of a risk plan that holds it all together. And if you're serious about fleshing this out for yourself, and if you want to put in this work and to do this, a very strong exercise I would recommend, and this is what I did. This is what I did to have this, to have like the first initial ideas of my process, was sitting down with just a blank sheet of paper and then just writing on the paper, what makes a good trading business? Just thinking about this. We're here, we're trying to have good trading businesses. What makes a good trading business? And then what you want to do is just start brainstorming. Just start brainstorming a good trading business. Just write down everything that comes to mind. You're probably going to come up with stuff like a good trading business should have a method for how you can come up with good ideas. A good trading business would need a good trader to be there and to be executing on those ideas and to be trading it. Just list down everything that you can think of. No judgments. Nobody has to see this. It's just for you. A lot of the things you write down are probably going to be trash, not good ideas, but it doesn't matter. You're just getting it out there. And then once you have this list of things, just circle back around and start fleshing those out. You've put down on the list probably that every good trading business needs a good trader. Okay, what makes a good trader? All right, a good trader is probably somebody that's focused, probably somebody that's in control of themselves, probably somebody that's mentally clear, yada yada yada. What makes a good, every good trading business needs a good trading method. Well, what makes a good trading method, right? Well, you're going to have tools that you've mastered that you can rely on. You have to have a way to come up with a high quality trade idea. Just start listing all these things out. And then for every one of those things you list out, you can also flesh those things out. So every good trading method needs a way to come up with good trade ideas. Well, what makes a good trade idea? And what you'll do is you just kind of start branching this thing out of what makes a good trading business. And eventually you're just going to start refining this thing down. And this can lead you to the initial stages of your process of what that looks like and what you need to do. Because eventually you're just going to get down to things like entries. What makes a good entry? You're going to be able to get clear about that. And all of a sudden now you are clear about what makes a good entry and what you're looking for. And you can put these things, and for me to come on here and tell you is one thing, or for somebody else to tell you. But when you sit down and get alone and don't Google this, don't try to find other YouTube, just sit down with a piece of paper and get these answers yourself. This is powerful because the realizations and the clarity that you're going to come up to when you put in that effort, it's going to be wildly different than if I come on and I just tell you something or if you hear it from somebody else. So this is a extremely worthwhile effort. It'll likely take a good hour plus of time, but just to sit down, maybe not even one setting over the course of a few different sit downs, just sit down quiet by yourself with a blank sheet of paper and get clear about ultimately what makes a good trading business and see how that gets fleshed out. And then that can initially be the first steps in your process. This is how I came up with my process. And this is how, I've been refining it and building upon it. And then once you have that in place, as we said at the very beginning, now you can start measuring your trading up against something. So when something is going wrong in your trading, it's not just, I don't know what to do. You can look at it and be like, well, my trade ideas are garbage. They're failing all the time. Nothing is working with my trade ideas. Okay, something's wrong with that part of the process. Let's learn a new method. Let's figure something out, what's going wrong here. Or I'm getting all of these great ideas. The market's doing what I want it to do a lot of the time, but I'm constantly getting chopped out of these trades. Okay, there's probably something wrong with your entries. Let's just look at that. Let's figure that out, right? And we can, once this is in place, we can start just gradually making these improvements, refining the process, changing the process, and ultimately just keep improving the trading business. Yeah. Okay, those are some thoughts for your thoughts. And that's where I'll leave you with that. I hope that helps. As I said at the very beginning, it just took me like a wildly long time to sort through these things and to even get to the place of realizing like what was going wrong in my trading and how I didn't have this in place and how I was lacking in it and what made it up. And hopefully you can run with this yourself and this speaks into you on your side of things as well. Okay.